Hello and welcome to Paying for College, brought to you by the Virginia Credit Union. My name is Tom Katosich. I'm a financial educator here at the Credit Union. I appreciate you guys tuning in today to learn a little bit more about funding education. My role here at the Credit Union is I manage our youth and college financial education programming. We're very passionate here about educating people about making good, smart financial decisions. And for a lot of people, that does include some sort of post-secondary education, some additional credential or educational experience to increase your value in the labor market. So that's kind of what we're talking about here today. First off, one of the things that we like to talk about is whether or not college is actually worth it. And as the cost of college continues to rise, this question does become more and more pertinent. You see a lot of young people today start to make decisions not based on this all-time guaranteed college is definitely going to pay off in the long run mantra that we've kind of thought about in our society, our economy. But as you can see, this data is a little bit old. It's from 2018. It is still a very valuable thing to do or accomplish or achieve is get some kind of education credential. So as you can see on the blue bar chart, that is unemployment rate. So that's like the likelihood of you being a job, having a job or being employed. As you can see on the green bar chart here, those are median weekly earnings. So again, what we know from like statistical data and analysis is like all of these things are based on a curve. And so you may be on the lower end of the curve or the higher end of the curve, but nothing is guaranteed. No investment is ever guaranteed. So you could potentially put yourself through college and still find yourself struggling to find a job. What's going to help with that is, what you choose to study and the college or university you choose to go to. So really kind of the financial value of the degree or the education is, number one, it's the credential. So it's the actual certificate. And number two, it's of course like a network and, making connections with people who could potentially lead you to jobs in the future. So there's still a ton of benefit of having a degree and having a master's degree and a doctorate degree. And when you're making these kinds of investments, you're investing in yourself and your future earning potential. So I'm a firm believer in education. I think it's a great investment, but the costs continue to rise. So how to pay for it is what we're going to be talking about here today. So how do you pay for college? How does anybody pay for college? Well, there's a couple different buckets that we like to look at. One is your own savings or maybe your family savings, depending on who you are listening to this particular educational video. It will determine kind of what your thoughts are on this. Like I'm a parent right now. I have a young daughter, and so we're already starting to think about that for her. If you're a student currently right now, then then your options are going to look a little bit different. So typically you have your own money, so money that you've saved or that a family member saved, your own current earnings, out of pocket, cash flow. Then you have grants and scholarships. We're going to kind of break that down. And then the last thing is about getting a loan. So basically like that's still your money, but it's your money in the future. So you borrow some money to invest now in a credential or an education that will pay dividends. It'll pay more in the long term than you're borrowing. That's hopefully the case for you. So we're going to break these things down, and we're going to start with out-of-pocket savings and earnings. So there are a couple different options for this. Like if you're a high income person, a high earning person, then paying for college out of pocket is, maybe a reasonable thing. Right now, average in-state tuition annually in Virginia is like around the $20,000 range for a whole year, give or take. And that's depending on where you go to school and including books and fees and all that kind of stuff. So if you can swing that, that's great. Like if you can afford that straight out of your pocket, that's fantastic. A lot of people though, that's a real high stretch, and most people can't really just afford paying that out of pocket. So a lot of times you think about saving in advance. Okay, so this is kind of my situation. I got a young daughter, and so we're already starting to think about how we're going to help her pay for college. Although 18 years from now, who knows what the higher educational system is going to look like. I know going through this pandemic right now, a lot of schools are kind of reevaluating what their business model looks like and what their resources look like and things like that. So the college experience of the future may be very different from what we're experiencing now or what we have experienced traditionally. So how do you save for that? Well, you could just put money into a regular taxable savings account or some type of investment account. A lot of times people do recommend, a lot of financial advisors will recommend tax advantaged accounts like a 529 savings account, or maybe even a Roth IRA type of savings account. Please make sure that you're talking to a professional tax advisor whenever you're looking at these different options. They can definitely kind of help you. One of the popular ones that I will kind of tell you a little bit about is that 529 savings account. A 529 savings can be a very valuable thing. Basically, what you do is you open up a 529 savings account and you deposit money into that account while your child is young. You do it consistently over time. In that account, you can buy investments that will potentially gain in value. Hopefully, they will gain in value over time. And they have all kinds of different investment options. Again, talk to a professional about this. I'm not giving you any advice. This is just for your information. Virginia 529 is a really well-run plan, and they have a lot of different options available. The tax benefits or advantages aren't quite the same as like an IRA. A lot of people think that they are. With Virginia 529, if you're a Virginia resident, then you can deduct 529 savings contributions from your tax, from your state income tax, your Virginia state income tax, not your federal income tax, but your Virginia state income tax. There are caps and limitations on that. Again, do your research. Virginia 529 is a great resource for that directly. But the real advantage is that money can sit in that account and grow. And when you go to withdraw the money when your child is of age, or maybe this is for yourself, then you can withdraw the earnings without having to pay any taxes on that at that time. So that's where the real main value or benefit from that is. Again, another one is pay as you go. This may end up stretching out your time as a student. If you're the student that's thinking about this, because as costs continue to rise, like being able to manage your work life and your school life can be very, very challenging. I do know a few students that have done this, and it's an incredibly rewarding thing once you've accomplished it. It's just really, really hard in terms of time management. So remember, the point of you being in school is to get the education, and you don't want to shortchange yourself on that, because that's the credential, that's the value of the whole thing, is getting that education. So the pay-as-you-go model, again, if you're paying for somebody else, that's one thing, but if you're paying for yourself, that can be a really, really challenging thing. But again, this is money that you don't have to repay, so that's great. Definitely want to think about that. Then we come into grants and scholarships. So financial aid is a system that is incredibly complex, and it's set up at multiple different levels of government and through also the universities themselves. Through the federal financial aid program, you have grants, you have work study, and you have the loans. All of that is considered federal financial aid, which we're going to break down some of these components as we go through this. Also, though, your state does offer some aid. There are a lot of really actually very generous programs run through the state of Virginia, so you want to make sure that you're checking that out. If you go to a website called collegescholarships.org, there's a really comprehensive list by state, also around like all the different federal programs that are available as well. So that's collegescholarships.org. That's not affiliated with the federal financial aid program. If you're looking for that, you want to go to studentaid.gov, which is that is like the place to go for all information regarding student loans. But in order to know what you're eligible for, this is the most important thing that you need to learn about, is the FAFSA, or the Free Application for Federal Student Aid. So this is the application. It opens up in October 1st of every year. Different schools have their priority deadlines. So make sure you know kind of where, like whenever you're sitting down to complete your FAFSA, you need financial information and you need to know where you're going to school. Like these are the most important things. And almost all financial aid, whether it's from the federal level or the state level or the university level, requires this. Like this is kind of the hub of where they gather your information. So typically the process is you create a FAFSA ID, which is like your unique login. You complete what's called the student aid report, which is like your financial information. You can link that directly to your tax information. Typically now they look 2 years prior. So like they'll look at, like for this calendar year, they'll look at 2018's tax information. In order for you, one of the key things to know what kind of aid you're eligible for is your dependency status, whether or not you as the borrower, the student borrower, are classified or labeled as a dependent or independent student. Most students are going to be labeled as dependent. Even if you're the parent listening to this, you can't just say, yeah, I'm not going to help my kid and they're going to be on their own paying for school, so my information doesn't matter. That's not really how this works. Like, you're going to be classified as a dependent under most circumstances, unless like you filed for some sort of legal separation from your child, unless your child has a dependent of their own, like a child of their own, or if you had military service or been in the foster care system. Like, those are the only ways that I know for sure where a student can be classified as independent, up until the age of like 24. So your information as the parent will be included in the FAFSA. They've tried to streamline it over the years, so it's pretty intuitive as it links to your tax information. Now with COVID going on and the pandemic, like, they're making a lot of exceptions if your financial situation has changed since 2 years ago significantly. Again, studentaid.gov is like the resource to find out all of that information. So how is your award calculated? It's what's called your cost of attendance, which is the number that's created by the university. The university sets the board of governors at each university or college will set their tuition rate, as well as any estimated books and fees. A lot of times the cost of attendance is an estimated cost based on averages and student averages, like in terms of room and board, and some of these things that you may actually have a little bit of wiggle room in terms of the cost, but that's set by the school. And then your estimated family contribution is your number. So that's the amount of money that you and your family are eligible to or able to contribute based on the government's calculation. And so again, like, when you fill out your student aid report as part of your FAFSA, that's where that information is collected and spit out. I could go on for a long time about how this is all calculated, but it's so individualized and personalized that we'll take it like 2 hours to talk about all of the information that goes into that. Again, it's pretty self-explanatory and intuitive as you kind of walk through it, but you just need to make sure that you're filling out your FAFSA as completely and honestly as possible. Okay, so private scholarships are another thing that are available to try to get. These are typically not distributed through the FAFSA or through your school or university or through the federal government. There's tons and tons and tons of money out there. You just got to go out and find it and get it. So whenever you're looking for private scholarships, you want to try to be as organized and create calendars and deadlines, be as organized as possible. You want to cast a big net. There are like different student or scholarship aggregating websites that you can visit. I mentioned one, collegescholarships.org, as well as FastWeb is another fairly commonly used one. You should probably avoid scholarship aggregating websites where you have to pay. You want to try to avoid paying for using these kinds of things. And whenever you're applying for a private scholarship, it's usually a panel of people that are affiliated with that organization that's giving out the scholarship. So do a little bit of research on who it is that's giving you the scholarship, and tell your story and try to relate it to whatever it is that you're whatever organization is that's offering the scholarship. So here's a great example. Virginia Credit Union offers 30 scholarships every year in the value of $2,500. We're very, very proud of our scholarship program. If you're a member of Virginia Credit Union for at least 6 months, you're eligible to apply. And we ask you to write an essay like most scholarships do, and ours is around financial education. So if you attended this webinar, you can include that in your application. Say, hey, I really learned a lot about paying for college by this webinar, and I've looked at these other webinars. So you want to make sure that you're telling your story and be honest. Of course, you want to make sure that you're honest. Now, after you have exhausted all of the money that you don't have to repay, then you have to these options that are available for federal student loans. So this is called federal financial aid, but these are loans that you have to repay, and they're typically offered to you in these different types of loans. So you have subsidized loans, which are loans where the government is paying the interest while you're in school, so you don't have to pay interest. A lot of times people think that like interest is not just being charged, but it is. It's just being subsidized by the government. That's why it's called subsidized loans. And then you have unsubsidized loans, which is like the main direct lending system. And so this is when the loan is issued to you, it's actually usually paid directly to your university, so you don't actually see that money. It just goes directly to your tuition. and the interest is starting to accrue as you are a student. Now, you don't have to pay. Your loans are typically in deferment while you're a student, but the interest is being accrued. It is charging onto that loan. So we'll talk about that again here towards the end. Now, if you if you completely cap out of the amount of student loans you're eligible that are subsidized or unsubsidized through the direct lending program, there are also federal plus loans that are available, but those typically require, for undergraduates, those require a parent as a co-signer. They're oftentimes referred to as parent plus loans as well, and you do have to apply for those separately. Those are also available for graduate students. Okay, so in the pecking order of what's good to take, like eligible that you're eligible for, you definitely want to take all grants and scholarships that are available, because that's free money that you don't have to repay. If you're eligible for work study and your schedule will allow it, work study is also a really awesome program. So that means you basically go to work for the university or a university related employer, and your paychecks will come either directly to you or they'll go to help pay the cost of your tuition. Then, of course, if you get subsidized loans, those are a good option because you're not paying the interest on those while you're in school. And then finally, unsubsidized loans are the next option. Now, all of these options are going to be determined based on your estimated family contribution and your cost of attendance at your university, and they're limited. They're all going to be capped. Okay, so if you run out of these options, then you also have private loans, which we're going to talk about that in a second. How you know what you're eligible for comes in the form of what's called a financial aid award letter. So these are available through your university, typically through like an online platform where your student account information is. And the information that's typically included in your award letter are any federal grants, school scholarships and awards, work study eligibility, subsidized, unsubsidized loans, and then if you self-report any external scholarships, they will include that in your award letter as well. And then all of that number total hopefully will equal what your cost will be for the semester. Sometimes there will be what's called a gap. What's not included is any unreported scholarships, personal savings, 529. So any information that is not reported directly to the university is not going to be included in your award letter. Okay, so if your number on your award letter does not match the cost of tuition and books and fees and things that you're required to pay, then that's what's called a gap, and you need to fill that somehow. Typically, that's done through private loans. So hopefully, you will be able to avoid getting private loans. This should be your last resort. Typically, there are standard lending practices involved in getting a private student loans. We at the credit union do not issue private student loans, but sometimes people do use like home equity loans or lines of credit to help their kids pay for school. Not a bad option, but remember that there's risk involved in that. So if you or your child cannot repay those loans, then there is a risk of foreclosure on your home if you tie that to your house. Oftentimes, private student loans cannot just be received by a 17, 18, 19, 20-year-old student with no current work history or experience, so they'll often need a co-signer. They're typically, again, that's what standard lending practices means, is there'll be a credit check and there'll be some sort of income verification process, that kind of stuff. Again, you are not afforded the same privileges of the private student loan or the federal student loan program when you get a private student loan. So you want to try to use this as the absolute last resort. The last thing that I want to kind of touch on here is, like, we've talked about all these ways of funding college, but really you want to think about costs. Like, are there ways that I can actually reduce my top line before I have to worry about those student loans and all that kind of stuff? And there are a lot of really, really strong strategies for doing that. And one of them is trying to get a 2-year degree before you transfer into a 4-year college or university. Now, this isn't going to be easy for all majors, but a lot of times there's, like, I know personally, Virginia Community College system is phenomenal, and you will get a top-notch education. And there are transfer agreements, and there are even transfer grants and scholarships for taking this path. So if you can attend a community college or a junior college while you figure out what you want to do, that's a huge, huge cost saver. I did that. My wife did that. We saved tons of money doing that. If you're able to get dual enrollment credits while you're in high school still, that's a good way to kind of help reduce your costs, because again, it's about the tuition. Your tuition in most colleges is based on the number of credits you take. So if you're able to reduce the number of credits, then you can reduce your overall cost. A big, huge thing is trying to complete your degree on time. Most colleges require 120 credits to graduate. So you want to make, if you're doing the math on that, then that's 15 credits per semester. In order to be classified as a full-time student, you sometimes 12 credits will classify as a full-time student, but 15 will get you done on time. So a good best practice is sign up for 18 with the assumption that you're going to drop one that may be too hard or you can't just handle, and then finish with 15 per semester. Also maybe looking at summer classes and things like that. Utilizing community colleges as well, it can be very helpful. While you're a student, if you pay interest on your unsubsidized loans, that will help. Basically what happens is every semester a new loan is issued, and by the end of your career, your college career, all of those loans have had the meter running, so the interest has been accruing. After the deferment period, once you graduate, you're given about 6 months before you are required to start repaying your loans. At that time, at that 6-month period, then all of the interest that has accrued on your loans gets what's called capitalized or added back into the principal of the loan. At that moment, you will start to pay interest on the interest that has accrued. So if you can pay off your loans, just the interest on your unsubsidized loans while you're in school, you avoid that compounding effect of paying interest on interest. Of course, if you want to live it, military service will help cover with the GI Bill, and but you're making a huge commitment there. And then, of course, just being smart about your daily money management. Live at home. Try to, reduce your transportation costs, reduce your extra, entertainment costs. Maybe give up going on spring break every semester or every year, whatever. Like, make good financial choices. And there are a lot of resources out to help with that. And I know colleges and universities are making big, huge investments in that. So really good websites to reference. Collegescorecard.ed.gov is a really good resource to kind of compare colleges and universities in terms of cost. Studentaid.gov is a fantastic resource for all things student loan, financial aid, everything through the federal financial aid program. Collegescholarships.org is a good one that kind of help you learn more about like ways that you can get scholarships and grants and things like that. Be a good consumer. Like, you are a consumer in this market, so you want to make sure that you're shopping around and really being thoughtful of decisions. And signing those financial aid documents is very nerve-wracking because you are taking on a lot of debt, and that, you really want to do some of this stuff in reducing your costs. That will really, really pay off a lot in the long run. So I hope this was helpful for you. You can reach out to financialeducation@vacu.org for any additional information. That's our email address that comes to all of us. And I hope you got some good value out of this today. And good luck. Invest in yourself. That's a great way to improve your value.